Welcome to the Swing Trading with Cycles channel. We are going to review the broader markets today. We'll start with the SPX, and today we're going to start. We're going to start looking at the Dow. So we'll look at the DIA, which is a ETF that tracks the Dow. I generally had ignored the Dow historically just because it's only 30 stocks, but at the same time, it does have a different sort of risk profile per se, given the composition. So we're going to start looking at that as well. So it is October 29th, and as always, our little preamble, we time the markets without predicting them, right? We look at the price action. It's math. Higher highs, higher lows, lower highs. What direction are we moving? Are we trending higher, trending lower, or moving in some kind of frustrating sideways fashion, right? And so, as we've been talking about, we are in a new weekly cycle, right? This was week 2, and we'll talk about the daily chart first. And if you're not following on Twitter, definitely take a look at the links in the description or the channel page. You can see links to the Twitter account. That'll give you more real-time updates. But the idea is we have made a series of higher lows, like that one and that one and that one, right? Like, think about that, right? So this day we had the massive move up, and then this next day there were a lot of people just howling at the moon. Oh my God, we're reversing hard. It's over. And like, wait, relax. We didn't break the low, right? and this held, right? This is where we closed, right? Like where we're drawing the arrow here. And then the next day we had an inside day. Again, people were like, that's the thing, and that's the whole point of this channel, the education. Again, as I say it, when I say it's just math, like on this day we hadn't made a lower low or a higher high, right? No higher high, no lower low, just consolidation, right? So it's like, relax, don't let the emotion overtake you. Nothing is happening, and that, like, this helps you to understand that, right? And then the next day we gap up, but then we have kind of a frustrating day that ends red, and then we have that 3 days or 2 succeeding days of red, and then look at this little rally for 3 days after that. So again, this this low holds, we move higher, we make a low. What happens to that low? Well, it's higher than this low. That's the start of an uptrend, folks, right? Like, this is an uptrend on the daily chart. And then we make this move up, really ugly day. And we had talked about like this level, that 3806, that was your level here. Like, this was a cluster of highs that we needed to get above. We got above that, right? Like, think about that. We made this 3-day run, right? This is a higher high above here. This is a higher high above that. This is a higher high above that, right? Nice. Also, this was a higher high above that, right? But then the next day, we actually made a lower low. That's important. We closed below it, right? And again, huge ammo for people. Again, you let your bias kind of overtake you. Like, oh my God, it's red day. Like, well, yada, yada, yada. But then we have a violent reversal on Friday, right? This is a false breakdown. And that's the thing about the multiple time frame analysis. This is a daily chart, but if you sort of looked at this on different time frames, you could see the, the false breakdown more clearly, right? Once you combine these two candles, this ends up being a candle with wick. This ends up creating the wick, right? And we have like a wick below here, and then we move higher because we closed above here, right? That's important. And again, it's about the price action. That's why I focus on that, because it's about the price action, not the count. We'll talk about the count as secondary. So the count would be day 11 off of this daily cycle low, which again, we're saying is also a weekly cycle low. And we're going to move to the weekly chart after this. This line here is your 10-week moving average, the blue line. The yellow line is the blue line is your 10-period moving average. This is a daily chart, so this is your 10-day moving average. And the yellow line is your 200-period moving average. So in this case, again, it's your 200-week moving, your 200-day moving average. We have a long way to go before we get up there. And also interesting that if we were to get up there in the next like 2 or 3 days, we would have to go through this gap area. So this was your CPI gap from September, right? So we had a gap down opening because the CPI comes out at 8:30. So the futures take all the, they're all the reaction happens in the futures, and then SPX cash, which is what this is, opens a certain way. In this case, it opened as a gap down and then just went straight lower. And notice we just trended lower after that, right? So we just fell away from this gap, which starts at 4038, right? So 4038. That's about 138 points from here. Like, this is on the SPX cash again. So a lot of upside from here. And this huge one-way directional day probably means we get some chop in the next couple days. So that will actually give us setup, to potentially get in. And obviously, we could have a violent reversal to the downside. Guess what level we need to go below for that to really matter? Right. The 3806 level, right? Like, that really makes sense, doesn't it? Like, we have this higher low here, and then we have this higher low here, and then this higher low here. So the next low that we get, which is to say the next pullback, needs to hold above the previous higher low, which is just around this 3806 level. Call it 3800, even. And again, these are zones, not levels. That's a really important concept to grasp. You're not going to don't expect things down to the tick, right? You have to give things a room, a sort of a margin for error. So the other thing to keep in mind is that this is day 11, and these daily cycles have been kind of all over the place. We did get this 40-day rally, right? Like, that fell into a day 54 low. So we rallied for 40 days, and then we declined for 14. These are all trading days, not calendar days. Doesn't mean we're going to get a daily cycle that's that long, but that's the kind of thing that you want to be watching out for, right? Like, where are we going to get the top, right? This one was really short in that we got a top on day 4, but we also got a low on day 27. Now, there are some out there that are saying this is actually all one cycle, and maybe that will come to pass. We will know that if and when we cross below 3806, 3800, call it. And obviously, we're up here at 3900, so that means a pretty big decline even before we get that confirmation. And we'll talk about that a little bit. So to go to the weekly chart, even more important, again, so we talked about that. Also, we talked about that in our the weekly report last week. The idea that we had a swing low confirmed, right? Like, look at that. We closed above. This is your low, right? And the high on this candle is 3712. That's your level. We closed well above 3712, right? We closed at, what was it? 3752. And then we just got really nice follow through. Now notice we did get a dip, right? And we know we just looked at the daily chart. Again, this is multiple time frame analysis. We just looked at the daily chart. We saw that dip, but we now got some pretty big follow through, and notice we closed above the 10-week moving average. That's what the blue line is. The blue line is always your 10-period moving average. And we also, notice this yellow line is right here. This is your weekly chart, so this is your 200-week moving average. And notice we closed below it, or right at it this week. Then we bounced above. Then we closed here. And now we've moved higher. That doesn't mean we have a long-term bottom by any means, but we are on week 2 of a new weekly cycle. And here's the thing to keep in mind. The last weekly cycle rally, which was bearish because it had made a lower low, lasted 9 weeks. That doesn't mean this one will last 9 weeks. There's no reason to think that's exactly what's going to happen, but that gives you a sense. The one before that lasted 5 weeks. The one before that actually lasted 13 weeks, but that was the one that created the sort of the top that really created this long downtrend we've been in for almost a year. So that gives you a sense, knowing the FOMC meeting, or a meeting and announcement is next week, we could easily see, imagine we make another higher high on week 3 and then we roll over. Could totally happen, right? This was a really early rollover on week 5. So maybe we get an extremely early rollover on week 3. That's a scenario we have to be prepared for. But we also have to be prepared for the idea that we just rally, right? And the next, you can just see it on this chart, right? The last important swing high was right around the 41.12 1220 area, right? So that becomes a sort of a magnet to the upside almost, right? Like, which is to say, doesn't mean we'll get exactly to that level, but price tries to kind of move in that direction. And you'll look for clues as to if it's going to make it. And finally, on the monthly chart, big, most important of all, the September high. Again, we're talking about how we make swing lows, because a swing low is created by a higher high. So we need to make a higher high above the high for this candle here, right? This is the September candle, which is, that would be a high above 41.1928, right? And again, that is a good distance from here, right? That is 200 points from here. Now, we're obviously not going to have a 200-point rally on Monday to close out October. And that's why this concept of like a compound outside candle is so important to understand, right? Like, this October candle is obviously going to be preceded, or I should say, succeeded by the November candle. And so we could see a situation where the November candle continues higher above that 41.19 level to make this whole thing, so to make the combination of the sort of October and November candle an outside candle of this whole thing. Now, what you would be really crazy is if we got above here, right? Because if these two candles, so this is your October candle, and imagine your November candle up here, become an outside candle of the August and September candle combined. I hope that's making sense. If it's not, like this is more advanced stuff, to be fair. Like, the idea that, like, the time frames are arbitrary, I guess, is the way to think about it, right? The price action is always happening. It's happening at every level, always in perpetuity, just moving nonstop. And so you want to try to understand it within, like, not necessarily just within the cookie cutter bounds of like monthly candle, weekly candle. Like, that's more advanced stuff, but that's a really, like, we could see, I mean, that would be a move to 4,300, which seems extreme, especially if it's going to be bearish, right? Once you get up there, you're starting to think, oh, well, that's interesting. Maybe we have made a long-term cycle low. But what I will say is, it definitely seems like we're going to make a move we're at least going to try to test the 4,100 area. So I think it is right to be long here, again, with the right stops in place, obviously. So that's the SPX. We'll move on to the QQQ, which is weaker, and we'll see exactly why. Look at that. SPX has made a new high on the daily chart on day 11, but the Qs are still below their high. Like, we still have a high from day 8 for the Qs. That makes sense. We had these bearish, like, we had the bearish move from Microsoft, Meta, Google. These are all big components within the QQQ. Apple is certainly holding it up. That's why you had like huge, and this is, that's a bullish outside candle on Friday, right? Day 11, but did not quite get above that high. I think this is a case where everything else kind of drags the Qs up, whereas, sometimes it moves in the other direction where other things drag things down. But again, that FOMC meeting, we could see a violent reversal and a really early weekly cycle top. So that's what we're watching for. And with the Qs, we just barely closed above the 200-week moving average this week. And again, this is also appearing to be week 2 of a weekly cycle. We did not actually close above the 10-week moving average. That's important. SPX definitely did very comfortably. In the case of the Qs, we did not, right? And again, we know it's weaker. So this is building a bigger case that this is just a little bear flag, a little lower high that's going to spill over, right? And if we look at the monthly chart, same kind of idea. In the case of the Qs, that's a move. We need to move above 311 to have a monthly swing low, which is what we will need for an eventual bottom. So that's another $30 up from here, more than 10%, well over 10% from here. And I forgot to mention this blue line here, or I should say teal line, on the monthly chart is the 50 period moving average. So again, since it's a monthly chart, it's the 50-month moving average. Very long-term average, right? That's like more than 5 years. And we still haven't closed below it, but we're like really flirting with it. and we dipped well below it and then kind of really recovered. So we're going to be watching that as we're about a year in, or yeah, we're getting into just about a year into the decline because the Qs topped out in November of 2021. So we're about to make a full trip, round trip 1 year of like sort of just in this downtrend, right? Like lower low, lower high, lower low, lower high, lower low. Maybe this is going to be a lower high and then another lower low is what we might expect. That's the Qs, and then IWM. So IWM has made a higher high on day 11, like the S&P, and unlike the Qs, so it's doing better than the Qs. That's important. The Qs are underperforming here. That's really, and we know why, right? Because of the tech, right? Because of the poor earnings, which may bleed through the rest of the market, obviously. And in this case, we're very close to our 200-week moving average, which is aggressively moving lower, that yellow line. I mean, look at that. Like, that's just sloping massively lower. And if we look at the weekly, same idea. Week 2 of a new weekly cycle. In this case, you expect a test of the 190 area. And then it's a question of, do we come back and kind of test this, last weekly cycle, the last ICH, if you will. And on the monthly chart, we're like really close to making a new monthly high, actually. Like, so last month's, so the September candle's high, right? That's at 190 level, right? So if we can get to that 190 level, that will give us a new high on the monthly chart. That will make, that would actually make October a swing low because we made a new low. So we're kind of setting up a bullish outside candle. As I said, we're not going to complete it in October, but we could get sort of some kind of compound outside candle where we complete the pattern in November. So the next candle kind of completes it. And finally, we'll look at the DIA, which is your proxy for the Dow. Day 11, and I haven't sort of mapped out all of the daily cycles, but this is something people are talking about, right? That the Dow closed above its 200-week moving average, which is this yellow line here. And so, does that mean it's ripe for a pullback? That's sort of coincidence almost, right? Like, in general, it's more a question of, has it rallied for so long, like these 11 days, that now it's going to start to pull back? And what does that mean for the rest of the daily cycle, right? And if we look at the weekly, it's the same idea. It's the same count, right? So we made a low on week 17. This is now week 2. Previous weekly cycle was week 16. That was your previous. So it's all actually pretty similar count to the rest of the indices. And in this case, it looks like there's a magnet at 343 and we're down here at 328. So what is that, like $16 of upside kind of thing? Not huge percentage wise, but this could also kind of be leading us out. And here's why. Look at this monthly chart, folks. We have a new high. That's what we're talking about. That's what we're going to want to see on the other indices. We're also going to want to see that this holds, though, and we'll look at an example where it did not hold, right? So this candle marks a low, right? That's September. The low was 287.04. The high was 325.68. We closed above that high, right? We closed at 328 and change. That high was 326, right? Or 325.68. So this candle, this September candle, is now a swing low, a bullish monthly swing low, right? So the Dow is leading the other indices in terms of bullishness. That's important to understand. That might be a sort of shift in what is going to lead in terms of the way out. That doesn't even mean we necessarily have to have a long-term bottom here, but it does tell you want to be paying attention to this basket of stocks, this like little 30, this basket of 30 stocks. And obviously Apple is one of them, which is one of the largest companies in the world. So it's not necessarily niche, but that's an important signal. That higher high, I'm watching that very closely. Now, many other things happening. We're going to take a look at uranium in general, in particular. We'll look at the dollar, precious metals. So definitely take a look at that content, if you will. But this is our wrap up of the broader markets. There is possibility that we have made some kind of long-term cycle low. That's totally possible. But at the same time, it's entirely possible that we're just moving into some kind of lower high. Like even here, you can see this candle here. Yeah, moving to that 343 area. Like we could see like we make a little move above that and then we keep going lower. We just we want to be watching the price action, and that's what we're going to do here on this channel. And the beauty of it is there's going to be a lot of money to be made on the other side of this. And we're going to do that together here on this channel.